The dollar era seems to be close to an end. And on the other hand, the silver market is booming like never before. According to Andy Schectman, the president and owner of Miles Franklin Precious Metals, demand for silver is at an all-time high. Prices are about to explode. In a recent interview with Quoth the Raven from Fringe Finance, the world-renowned expert in the field of precious metals warned about an imminent silver squeeze and how precious metals will play a role in the future of money worldwide while the US dollar fatally collapses. Even though the silver market is a huge market, more silver is being consumed than is being mined each year. Only in 2020, nearly 850 million ounces were mined globally, but demand exceeded 1 billion ounces. In our modern world, silver is key. It's essential for new applications in green energy and battery-powered vehicles. It's in critical parts of most electronic devices. That's why the industrial demand for silver has started to grow exponentially in recent years. However, while industrial demand skyrockets, annual global mine supply is dramatically falling, which, according to Schectman, is an indication that a global renaissance in monetary demand is right upon us. All of this is happening at the same time Wall Street bullion banks manipulate the price of monetary metals. In fact, they have been doing this for decades, which has allowed the global elites to accumulate massive amounts of physical gold and silver at subsidized prices. The expert explained that the physical demand filters down from the top. Since 2020, more than 300 million ounces of silver have been removed from the COMEX market by some of the wealthiest and most well-heeled investors in the entire world. Most deals on the COMEX are settled in dollars, meaning that the market isn't set up to be a source of physical delivery of silver. The fact that millions of ounces are being removed from the market each year is not a small development, particularly when considering that the amount of silver taken away from the market last year represents almost a decade's worth of silver deliveries. But 2021's COMEX deliveries are right on track to surpass 2020's delivery numbers. And when all of this is added to record global retail physical demand in coins and bars, physical demand at some point, and probably sooner rather than later, will completely overwhelm supply, warned Schectman. Given that silver is found very near the surface of the earth, most of the big deposits were already found decades ago, even before the development of enhanced imagery. For that reason, today, only about 30% of global mine supply comes from primary silver miners. The other 70% actually comes as a byproduct of mining other metals, including copper and zinc. In short, the amount of silver being mined each year results in a very tight supply due to enormous demand. And now that silver's in the crosshairs of a new class of deep-pocket investor, from hedge funds to home offices, physical demand is expanding very rapidly, as the Miles Franklin CEO pointed out, adding that the retail demand is soaring too. As an example, the Miles Franklin business is up between 300 to 400%, and it's 95% silver, Schectman exposed. This new large demand is being funded by savvy investors taking profits on stocks and Bitcoin, he said. Unlike most commodities that only have one primary source of demand, for instance, copper is a metal for the industry, while gold is mostly a monetary metal. Silver is in high demand by both industry and investors, which is inciting fierce competition amongst affluent investors in the silver market, and at some point, the industry and investors will be in competition with each other. And that point is not far off. So I think a squeeze is not only possible, but actually highly probable, Schectman stressed. Consequently, the true pin price for precious metals is much higher than it used to be. According to the Miles Franklin CEO, due to the relentless market manipulation, there is no accurate way to find honest price discovery. So far, the supply and demand of physical silver has had little effect on the paper prices set on the COMEX. Therefore, it is impossible to determine the true unmanipulated price. When adding inflation, money creation, and rising commodity prices to that equation, gold at $3,000 seems on the low side in his view. But silver is certainly the most undervalued asset on the planet, considering its importance for so many industries, highlights Schectman, who believes we now have the buying opportunity of a generation. But that window is closing fast. Currently, the silver-to-gold ratio is 75-1, which means that it takes 75 ounces of silver to purchase 1 ounce of gold. In contrast, only 7 ounces of silver are being mined for every 1 ounce of gold. That is to say, at a 7-to-1 ratio, silver is roughly 11 times undervalued in comparison to gold. The current price of gold is sitting at $1,800. If you divide that price by 7, that's the current global mining ratio, you get a silver price of $270. However, with gold trading at $3,000 gold, well, the number the expert expects to see sooner than later, then we get silver at a staggering $428 an ounce. The truth is that precious metals are a critical part of our next monetary era. Although silver is mainly used for industrial purposes today, it has been a form of wealth protection for centuries. And every time the world economies face a new systemic change in their currencies, precious metals hold on to their value, while fiat currencies like the US dollar are bound to face a sharp collapse. Now, keeping in mind that over the past year, the United States Central Bank has printed trillions of new dollars, expanding the money supply to levels never before seen and unleashing inflation, the inherent value of the dollar has already plunged to record low levels, and that lost purchasing power will never come back. Therefore, a major paradigm shift is about to start, and while our leaders continue to print, borrow, and spend money like there's no tomorrow, on the other side of the planet, China is getting ahead of the game, and is backing its new digital currency with gold. As the expert notes, people will not be able to trade in a digital yuan for a piece of gold, but gold gives the Chinese digital currency reliability and proof that its value will not deteriorate over time. Already, the Chinese government is selling gold-backed yuan bonds that can be converted into physical gold on the Shanghai Gold Exchange. The latest data shows that China has approximately 38,000 tons of gold, from which roughly 20,000 tons are owned by the state, 18,000 tons owned by the people. Now, this represents nearly 5 times as much as the 8,133 tons the United States owns. And another worrying factor that is putting the dollar at risk is that the Chinese are already financing several projects around the world with their gold-backed digital currency. In fact, right now, the Road and Rail Initiative, which connects Asia and Africa and involves 70% of the human population, is not only one of the most ambitious infrastructure projects in human history, but is also being supported by the digital yuan. As the expert explains, this introduces a new settlement currency to 7 out of 10 people in the world. Gold backing of their new digital yuan with proof of the holdings on a distributed ledger would promptly create demand and credibility for the Chinese digital currency. He warned, in one form or another, I believe that is exactly what will happen. And you don't want to own dollar-denominated assets when that happens. Years ago, most people would not believe that the dollar status as the world's reserve currency would ever be at risk. But after the government's catastrophic monetary response to the health crisis, its value has been extremely deteriorated. And when we consider our gigantic national debt, our currency doesn't look nearly as imposing and as strong as it once was. Trade partners around the world are already realizing that. In fact, China has already started dumping dollars it held on its reserves by the trillions. Many other countries are following the same move. The potential for a dollar collapse evolved from a seemingly crazed idea to a reality. The United States dollar is collapsing against other major currencies, and the post-outbreak economic rebound will only intensify that process. At the end of August, economist Stephen Roach issued a red alert. Roach, a former chairman of Morgan Stanley Asia, said there's now officially more than a 50% probability of a double-dip recession in the United States. This means that there's also a 50% probability that the dollar will go down sooner than most people even imagine. The economist based his prediction on historical evidence, mentioning that in 8 of the past 11 business cycle rebounds, economic output has increased for a brief period, and then it recorded a dramatic drop. He said in an interview with CNBC, "It's certainly something that happens more often than not." Roach alerted that a major dollar collapse will happen by the end of 2021. We've gotten data that's confirmed both the saving and current account dynamic in a much more dramatic fashion than even I was looking for, he revealed. To support his outlook, he pointed to potentially dire second quarter data. The current account deficit in the United States, which is the broadest measure of our international imbalance with the rest of the world, suffered a record deterioration in the second quarter. The so-called net national savings rate, which is the sum of savings of individuals, businesses, and the government sector, also recorded a record decline in the second quarter, going back into negative territory for the first time since the global financial crisis, he said. In his view, persistent vulnerability and the consequences of the initial decline are two factors accelerating the dollar's ominous future. Lacking in saving and wanting to grow, we run these current account deficits to borrow surplus saving, and that always pushes the currencies lower, Roach warned. And the dollar is not immune to that time-honored adjustment. And I think the record of history suggests that this is not a time, unlike what the frothy markets are doing, to bet that this is different. The stage is set for an apocalyptic economic collapse and a ravaging financial crisis. Buy gold, buy silver, and get rid of your dollar-backed assets before the everything bubble bursts. Things are changing rapidly. Very dark clouds are looming on the horizon. So, be prepared.